Hey everyone, it's Al Abaroa for Financial Intelligence Training. It's Saturday, it's October 3rd, and it is 2020. The fourth quarter is officially underway, and all headlines now are obviously being dominated by President Trump and First Lady Melania's positive COVID diagnosis. Before we dive into the markets, I'd like to take a moment to share my thoughts on the subject. This is not a political statement. This is not a left or a right view. This is a human view. Now, unfortunately, we all knew that their positive test results would have cheers from those that have opposed him, but some of those cheers are just plain vile. Now, the beauty of our country is that you have the right to do such things. You can speak your mind freely. However, just because you can do something doesn't mean you should do something. You see, freedom of speech should not overrule moral fiber. We are all human beings first. No one needs to like the president, and no one needs to like his opponent, but each of them are human beings. To wish ill or worse on either of them is what I believe is fundamentally wrong with our country today. If you follow me on Twitter, you'll see that I use the hashtag #LoveToHate. And I reference that because the current culture that we have in the country today is that of a love-to-hate mindset. If something is different, it seems that we must hate it. We need to move past that. We need to move past that as a country, and we need to remember that we are all human beings first. I'd like to wish the First family and anyone else that's impacted by this disease well. Okay, off my soapbox. Let's talk about the markets and what this means to your money. After the announcement, futures in the overnight market tanked. Friday morning, the pre-market was seeing a 57-point drop in the S&P 500. For the second Friday in a row, the market tried its best to claw its way back to find positive territory, only this time the market could not hold on to it. Now, it's important to note that the major indices are still holding at or near their 50-day moving averages, and I can't stress how important this is. As a reminder from last week's commentary, we witnessed 4 straight weeks of declines, and even in the wake of negative news, we have finally broken that trend in the S&P. The price action that we witnessed early in the week was everything the bulls would want to see. If the markets continue to hold at these levels, then the slide from that September 2nd high will be deemed a correction. And corrections are healthy for markets. For me, though, this correction, if it is a correction, well, it was a bit short-lived. You see, from a bullish perspective, I would have hoped for more time for price action to build the base before leading higher, but you know what? We'll take it. If you're a bear and you're looking for an issue to press, you're going to find that in Friday's lack of follow-through from leadership. Big names like Amazon could not hold on to recent gains. It slipped back below its 50-day moving average. Nvidia, which had been a clear leader, it took its fair share of pain, and it was down 4%. And these are just to name a few. But it's names like these that you want to see push higher. They've been doing the heavy lifting. And if they tire, well, someone else needs to step up. And I'm just not seeing any other suitable contenders currently in the charts. Now, the next few weeks are obviously going to gauge heavily on President Trump's condition. Improvements will bode well for price action, and I would expect pharma names like Regeneron to benefit from a speedy Trump recovery. By the way, that's not a recommendation, that's just an assumption. Now, we're under 30 days to the election, and the uncertainty that surrounds his condition leaves much to the imagination of who would lead the country and how policy changes might impact the markets. Knowing your risk now and how to manage it are as important as ever. I encourage you to think that through thoroughly. A strategic asset allocation of just stocks and bonds really doesn't do what you think it will from a risk management perspective, meaning the correlation between asset classes becomes just too fierce to defend against markets in downdrafts. It's your job to know what that means, and it's our job to help educate you and help implement those strategies. Stay tuned, everyone, because this just got very real. I'm Al Abaroa. Thanks for watching. Have a great day.